Well, the question is whether Switzerland is learning the lessons from the Credit Suisse collapse. And the Credit Suisse collapse 1 year ago was an entirely self-inflicted and predictable failure of government policy, central bank, regulator, and above all, finance minister. And then, of course, Credit Suisse had a failed, unsustainable business model and an incompetent leadership. And it was all indicated by the ever-falling share price and by the credit spreads throughout 22, completely ignored because there is no institutionalized know-how at the policymaker levels really to watch capital market movements, which is essential in the case of the banking sector.
So rather than saying, actually, well, there's a lot of things you said there as well. If you have a well-run bank, as it appears, such as UBS as well, that's in spite of what the politicians and regulators are trying to, rather than because of the rules in Switzerland.
Well, I think it's key for any economy to have a very healthy and competitive banking sector. And UBS is not just a private enterprise, and it's not just a Swiss bank. Yeah? It's a globally, systemically relevant bank. And in order to be successful as a financial center for Switzerland and for UBS on that global competitive level, you need a level playing field for the business, for the regulation, for the capital requirements.
So last point there, if UBS doesn't get a level playing field with the likes of Citigroup, Morgan Stanley, Goldman Sachs, JP Morgan, then Europe is going to lose another chance to compete on a global basis.
Absolutely. And that's true for Switzerland as a financial center, which has lost in the ranks for 20 years. There's a reason for that. And then, of course, also on a higher level for Europe. But that report of the government yesterday, that creates a lose-lose situation for Switzerland as a financial center and for UBS not to be able to develop its potential.
Bad management can happen. We've seen that over and over again, and there's no reason to believe that it won't happen down the track at a European bank. As we look at Credit Suisse and what happened there, was a series of bad management decisions, a series of bad managers. As we circle back to UBS and this giant entity we have, what protections can be put in place so that it just doesn't become victim to bad management and that doesn't impact the Swiss economy?
Well, it comes down to the regulatory level playing field. It's about competencies, of course, and then about the incentives and the regulatory framework. And the regulatory framework, like capital requirements, is a global level exercise. It cannot be that Switzerland or any other jurisdiction is imposing very, very different rules and levels there. That doesn't make any sense. Then you cannot really compete.
So if Switzerland doesn't have the know-how at this point to regulate a massive institution, how does it get to the point where it does? Is it simply a matter of recruitment, or is it a massive overhaul required?
No, on a regularly level playing field, it means that you have to have the capacity and the capabilities on a regulatory level. And it means very clear the lesson from the Credit Suisse collapse has to be that Switzerland, from the regulatory regime, goes on the same level playing field with Frankfurt, with the ECB, with London, with the Bank of England, and with the Fed in the US. And if you're not ready to do this, and that means deep reforms, and we saw from yesterday's report there is no will to engage in any relevant reforms, then of course it's not possible.
So just to be clear then, are you saying it's dangerous to have created a bank this size in Switzerland, given the backdrop?
Absolutely. I mean, the track record of the policymakers in Switzerland is that we had 3 global systemically relevant banks, and we have now 1 left. And these cases were the direct result of insufficient regulation and the enforcement of the regulation. FINMA had all the legal backdrop, the instruments in place to address the situation, but they didn't apply it. That's the point. And now we talk about fines, and that sounds like penny wise and pound foolish to me.
Sorry, I know we're both leading the witness here as well, but you're not saying UBS should be broken up, are you?
No, I just say UBS, if Swiss politicians don't engage in reforms of the regulatory framework,
then it's not the bank that needs
reform,
they should it's do their own rules themselves which are
absolutely.
Yeah.
No, I mean, I would wish that Switzerland as a financial center is competitive and grows, protecting taxpayers. That's one thing. That's a condition sine qua non, but you want to grow and be competitive, and UBS should be able to catch up to global players and US valuations.
Beat, we should ask you the most obvious question. You own UBS shares?
No.
Interesting. Do you own any European bank shares?
No.
Well, why is the question then?
The US is consistently better performing, absolutely, and I don't see any change right now towards creating a European banking union and capital market union, which is absolutely necessary to do to invest in critical infrastructure, defense, energy, etc.